FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is August 12th, 2019. Hey, have you been watching the gold prices? It's been going up today. Let's go to Kitco and give you the latest price action on gold and silver. When last I looked, it was up about $9. Now it's up $9.40 the ounce. Broke back over the $1,500 mark. It's trading at $15.0560. Silver up 12 cents the ounce. Broke the $17 mark again. And, well, is this just the beginning? Got Andy Schectman with us now. You know him well from milesfranklin.com. That's where you find him. And Andy, man, we haven't chatted for a while, but I saw you in Vancouver. What was your take on the Sprott Show? What was going on there?
Hey, Kerry, it's good to be back with you, buddy. There's definitely a buzz in the air at the Sprott Show. There's a buzz in the air in this industry right now. It's an interesting buzz, however. It's an interesting buzz in the respect that our business is very, very, very strong, yet I think somewhat emblematic of the crowd at Sprott. It is centered on the people who have a keen eye on what's happening in this industry. Let me elaborate. In 2011, when gold was $2,000 an ounce and silver was $50 an ounce, it was obvious what was happening, and we were getting 200 orders a day. Yeah. In 2019, for some reason, for whatever reason, the public at large is asleep. Yeah. We're probably in the midst of our biggest year ever, dollar-wise, order-wise, but the number of sales that we are doing, orders that we are doing, are roughly 20% of what they were in 2011. The accredited investor, the institutional investor, seems to be keenly aware of what is happening. The John Q. public doesn't. They are asleep at the switch. And there's so much information out there that absolutely is mind-boggling that the financial media in our country does not pick it up, let alone the mainstream news. I'd love to talk to you about that, Kerry, because there are 2 or 3 things that just blow me away, and I think will blow your listeners away when they learn about it, if they don't know about it already. Although following you, they probably have certainly a better idea on what's going on than most people.
We don't know quite everything yet, but we're trying to keep you as informed as possible. But look, Andy, there's stuff that I miss because there's just so much going on. Who the heck can keep track of it all? You know?
Absolutely. Amazing. Well, let me talk about a couple. The first one I'm sure you know about. It's called Basel III. I look at Basel III as the most influential, game-changing event, perhaps, ever in this industry. Basel III, for your listeners, is the canton in Switzerland is Basel, that where the Bank of International Settlements is located. Yeah. That's the Bankers Bank.
Yeah, the central bankers.
Pardon me?
The central bankers' central bank.
Correct. Yeah. And prior to March 29th of this year, gold was considered by the Bank of International Settlements as a Tier 3 asset. And what that really means is that, especially poignant for smaller economies, gold on the balance sheet was only valued at 50% book to value, and substantially undermining a country's ability to transact global trade when their balance sheet is hindered to that degree. And so what would happen, the Washington Agreement was a good example of this, where central banks were net sellers of gold. They were incentivized to sell gold and buy U.S. treasuries and U.S. dollars, which are Tier 1 assets, meaning 1 on the book. And so they were incentivized to do it because, that barbaric relic gold earning no interest and yet valued at 50% on your balance sheet, incentivized countries to shed gold and buy treasuries earning interest that would reflect a 1-to-1 ratio on the balance sheet. As of March 29th of this year, just a few months ago, the Bank of International Settlements reversed course, labeling it a Tier 1 asset, which not only gives governments the ability to shed dollars, I believe it incentivizes them to shed dollars and shed treasuries into gold. And if you look at Russia, they're a prime example. They sold all their treasuries, and they're the largest buyer of gold in the central bank community in 2018. In fact, all the central banks are buying gold in 2018. In fact, they were buying more gold in 2018 than at any time in the past 50 years. In 2019, first quarter numbers look 70% over quarter one, 2018. You are seeing in a strong incentive by the world's central banks to de-dollarize, to shed dollars and to accumulate gold, and it is happening, I would argue, at a very, very rapid pace, putting a floor under the price of gold. And I think when you throw into the mix the way that a lot of the world views the United States, it doesn't take much more of an incentive to de-dollarize and to move into something like gold, which aside from the Tier 1 asset rating, aside from the fact that it's been moving up nicely over the last year, it also is probably the most inversely correlated asset to the U.S. dollar. And according to Ibbotson, which is a subsection of Morningstar, is unequivocally the greatest or the largest inversely correlated asset to the U.S. stock market. So you have central banks around the world shedding dollars, shedding treasuries, and buying gold to de-dollarize and to hedge against ultimately what we believe will be a falling dollar and a falling stock market. We can look at things like the report that the Treasury just published recently. You know, every single year, Carrie, the Treasury publishes a report, talks about the state of the dollar and the U.S. markets. And they came out publicly about 2 months ago, and they said, we have a $22 trillion debt. They said that the Social Security Fund will run out of money in 15 years. They said that when you put all of our unfunded liabilities together, Medicare, Medicaid, Social Security, government, military pensions, these kinds of things, that our debt exceeds $100 trillion.
Easily.
And you know, 1 trillion seconds ago was 31,688 years ago. But they came out publicly and they said, wait a second, we have assets too. And they said, we have $3.8 trillion in assets. Do you know what the largest asset is in the United States, Gary?
I know you told me, but I'm going to let you break the news.
FSN Radio. It's all about what's next.
Financial Survival Network is brought to you today by Oren Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Oren is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Oren's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Oren's been called one of the best in the junior exploration sector. Oren trades on the TSX and the NYSE under AUG. To learn more, go to orenresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
Oh, I told you this. Okay, well, good. Number 3 is land, national parks and bridges, roads, railroads, things like that. Number 2 is military, aircraft carriers, bullets, helicopters, military bases, etc. The largest asset of the United States, according to the Treasury Department, $1.8 trillion, nearly student debt. Student debt is now considered a receivable because you can't, even if you file bankruptcy, you can't get away from it. Well, we put these things together. We see a country that is insolvent, a country that has nothing in the way of assets, a country that is creating geopolitical issues across the globe, and the central bank community that is being incentivized to shed dollars and treasuries and accumulate gold. And because none of these things are talked about, I mean, how the fact that the U.S. government, just between Social Security, which is $55 trillion in the hole and a $22 trillion debt, just between those two things alone, we're $75 trillion in debt. Yeah. Forget about the other unfunded liabilities. The fact that this isn't front and center news in every paper in America is appalling. And so you're seeing the rest of the world, or the big money, beginning to move ahead of the curve. The central banks, the commercial banks, the accredited investors, the smart investor is de-dollarizing. And so I would say to you that all of this move that we've seen in gold and silver has been void of the American public by and large, and has been attributed to the sophisticated investor. Long time ago, I was a financial advisor, Kerry. When you opened up the book, page 1 was titled The Little Man Rule. And the little man basically never wins, because the little man moves long after the trend has already been established. What I can tell you is simply this, that the most sophisticated, well-funded, well-informed, influential traders on the globe are amassing huge physical positions in metal, let alone JP Morgan, who's amassed 900 million ounces of physical silver, the largest single position the world has ever seen. I've been beating this drum for a long time, and over 25 million ounces of gold. You have the most sophisticated traders on the globe making these moves that are invisible to the public and invisible to our mainstream. You have candidates running for office that refuse to talk about the national debt. They refuse to talk about the fact that we are insolvent, and refuse to talk about the fact that the rest of the world are looking for alternatives to the dollar, whether it be in de-dollarizing into gold or striking unilateral trade deals like China, who came out with the petro yuan. So they buy oil from a Gulf state country, pay it in yuan, who then can convert it immediately into gold on the Shanghai Exchange and take possession of it. Shanghai Exchange has delivered 65 times more gold in 2018 than the U.S. COMEX market. There is a disconnection in information here, and that's why people listening to you, they're far more enlightened, Gary, than most of the people in this country. Most of the people in this country give you a blank stare when you talk about precious metals. So, I feel fortunate to be surrounded by people like yourself and the folks up at the Sprott Show in Vancouver who understand what's happening. And I'm only slightly remiss that it's difficult to convey to the people I care about here at home, people that I've associated with my whole life, who know what I do, have known what I do for a very long time, and still don't have a clue, Gary. I would say the mainstream public doesn't have a clue, and still very, very, very early in the cycle.
Very true. And just talk to Charles Nenner. He's talking $2,500 gold, not that far off into the future. Peter Hugg, analyst at Kitco, his prediction was $1,550 by the end of the year. So right now it's at $1,505. He's only $45 off. It could still go back and forth quite a bit, but I think the trend is definitely the trend here. You can't deny what's happening here.
Not only the trend, but the movements of the most sophisticated traders on the globe. Gary, I've been doing this for 30 years. And one thing that I have learned over the 30-year period, this 30-year journey, that I can say unequivocally, and there are very few things that I can say with certain as it pertains to finance. But I will tell you that when I came into this industry, the Dow Jones was 2,100 and the Nikkei was roughly 40,000. And Japan made better automobiles and microwave ovens and televisions and VCRs. For your young listeners, Google
Don't date
VCR.
Yourself too much. Don't date yourself too much.
Yeah. Yeah, well, they were making better everything than the United States was, and there was a fear that they were taking over the world. Japan was, and here we are many, many years later. Japan has lost 75% of its Nikkei with interest rates at or near zero for the past 20 years and still can't move the needle, while the U.S. stock market has, gone up 12-fold. So the one thing I can tell you is that bull markets go a whole hell of a lot higher than anyone ever thinks possible, and bear markets fall a whole hell of a lot further than anyone thinks possible. But what defines a gold bull market differently than every other bull market is that a bull market in stocks is defined by greed and people wanting to make more money. A bull market in precious metals is defined by fear. Fear and greed are the two motivators, with fear being a far, far more influential motivator. And when the public catches on, if the markets do crater, if the dollar does fall, or God forbid we wake up one morning to find Saudi Arabia accepting oil in euro, yuan, and ruble, overnight the petrodollar status is gone. Things will get very, 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 very crazy, very, very, very fast. And I think that's part of the reason you see these huge central banks divesting of dollars. The writing is on the wall. In fact, the private banking sector of J.P. Morgan, who deals with their wealthiest clients, just published, and it's creating quite a stir in the investment world, just published a report that said they are very, very concerned that the U.S. dollar will lose its status as world reserve, and that their clients should seek to redistribute their assets amongst other foreign currencies and precious metals. So when we talk about what is happening, what is going to happen, remember, 1 trillion seconds ago was 31,688 years ago, and we have 140 trillion in unfunded liabilities. The game's over. It's how does it play out? How does it play out in the end? And you can see it by the big traders are moving ahead of the curve before it plays out, because they know how this game ends. So I think that when we talk about where we are in the cycle, when we talk about what's happening, I think you don't have to look any further than what the big players are doing and try to emulate exactly what they're doing, and realize that there's not a word of it being said in our financial media. It's a travesty. A lot of people are going to go down in flames as a result of this, because you can have a diversified portfolio of stocks and bonds and what have you, but what good does that do you if it all falls back into dollars? Furthermore, as I mentioned a few minutes ago about Ibbotson, which is a group of it's a division of Morningstar. Ibbotson came out and said precious metals are the most inversely correlated asset to the U.S. stock market. And what precipitated them to say that, Gary, was the fact that because of these absurdly low interest rates that have nowhere to go but lower, or the whole economy collapses, worldwide economy collapses. It's a race to the bottom across the globe in interest rates. But because of that, what was once considered risk on stocks, risk off bonds is gone. That inverse correlation between stocks and bonds is gone. Because if interest rates rise, not only does it kill the mother of all bubbles, the bond market, but it collapses the stock market, which is trading at its most overvalued level according to almost every single metric, period. And so when you look at a market that is that vastly overvalued, paying virtually nothing in the way of dividends, if interest rates were to go up, investors will move to treasuries with safety, paying a steady rate of return, rather than being in a stock market that is overvalued, paying nothing. And so it has created an environment where there are very few things that give you risk off. They came out and publicly said precious metals are the only asset that will offer you a true negative correlation to the U.S. stock market. Think about what the big central banks are doing. They realize that as the U.S. stock market goes, so does the U.S. economy and ultimately the U.S. dollar. Yeah. They are de-dollarizing. They are selling treasuries. They are selling dollars, and they are repositioning. And that's exactly what your listeners should be doing. The answer, the question is not how much gold and silver should I own, but what exposure do I want to a currency that is default or defunct, literally, or broke, and work backwards from there.
Right. Yeah, I couldn't agree with you more, Andy. Things are not looking up here. How long can the illusion go on? That's the question. Nobody knows the answer, but it looks like it's starting to fade now. So, hey, bargains. We've talked in the past about anomalies in the precious metals markets, like platinum selling for, almost 2/3 the cost of an ounce of gold. I mean, it's crazy.
Yes.
What other anomalies are there at present?
That's right. So the distortions that have been created through interest rate manipulation and bond market manipulation and LIBOR and precious metals and Forex, all of these distortions that have been created have created anomalies. And you're right. The platinum to gold, the platinum to palladium, the gold to silver. The gold to silver anomaly is ridiculous. When you factor in the inflation-adjusted price of gold, I would argue silver is as undervalued as it's been in centuries, and I mean that, hundreds of years, if not longer, based upon the historical relationship and the inflation-adjusted price of gold. The average ratio of gold to silver over the last 100 years has been about 44 to 1. I haven't looked at it today, but 87, 88 to 1, you could trade your gold to silver right now. And then when that ratio moves back to where it has been for the better part of 100 years, you move back into gold and you double what you started with. That is a true anomaly. I mean, it's only been bettered one time in the last 100 years, roughly, the ratio that we have right now. And so it's come down a little bit. It was 93 or 4 or 5 to 1 a few weeks ago. It has come down into the upper 80s.
Still high.
But it is still as unusual as 4 feet of snow in the Florida Keys in July. That's how unusual this ratio is, period. You could look at the cost of numismatic gold. I flew all around America in 2007, 8, and 9, telling people to sell their numismatics and buy gold bullion. And the ratio or the premium that they were getting back then was 60, 70, 80% above gold, $1,000 gold spot. So I would fly out to someone's house who had 1,000 double eagles and certified grade, and I'd bring them 1,650 gold eagles. That was then. The mirror image of that to the opposite side is now, in that you can buy those same MS62 or 3 grade double eagles for less than a gold eagle. In my entire career, I would have bet my right arm that never would have happened. And forever, they traded at 25 or 30% premium to gold spot, not a 3% premium to gold spot that you find right now. The numbers are absolutely ridiculous. As it pertains to numismatics. But the anomalies are everywhere. If I own palladium, I would rush to trade it to platinum. If I own gold, I could make a convincing argument to convert it to silver until that ratio normalizes, and then go back to gold. And without spending any money, double the amount of gold you start with. There are anomalies to be found, and I would say if I were to encapsulate one thing that has made me successful in the past 30 years, unequivocally, it would be to identify and exploit price anomalies. And this is definitely 4 feet of snow in July in the Florida Keys right now. And I would say that, if things get where I expect them to go, you'll see that gold-silver ratio snap back very, very quick. A mutual friend of ours, Keith Newmeyer, I've heard him say several times that what's coming out of the ground is 9 to 1 right now. That so much of the low-lying fruit has been plucked because silver is found typically in nature in a form called epithermal, which means it's very close to the surface. So the very big deposits were found years ago. Most of what is being mined nowadays, Kerry, I'm sure you know and talk about this, about 65% of it is byproduct mining from mining other ores like gold or copper or zinc or what have you. And so when you talk about silver, when you see the most sophisticated trader on the planet, J.P. Morgan, amass 900 million ounces at the same time realize that most of the silver that has ever been, mined in the past however many 100 years has been used in industry and is in landfills. That's probably why it's getting difficult to get large investment-grade bars of silver, and before long it will get hard to find investment-grade here in the retail public. In fact, if I had to guess, I think before this is said and done, the market will be defined by most people from the outside by super high prices. I think the market will be defined from my side as inability to source product readily. I've seen it many, many times in this industry under far less intense situations, and I think that you'll see if we woke up tomorrow morning to find the public waking up to the reality of buying precious metals, it wouldn't take but just a little bit of influx. 1% of what's going in the financial world right now moves into precious metals. Overnight, there'll be nothing for anyone else to buy. And I say that with 100% sincerity.
Hey, I know where you're coming from. We've known each other a long time, Andy, and the picture you draw is one of bleak, but there is opportunity and you can protect yourself. So just go over to milesfranklin.com. Tell them Kerry sent you. Tell them you heard about it on this show. I know that we're in for a major bump up. We might be hitting a little intermediate top right now, at least according to Nenner. See a $20, $30 decline, but it's going to be nothing compared to what happens later. Anyway, questions, comments for Andy or myself, email me, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Andy, we will catch up with you again soon. Thanks for coming on.
Always good to hear your voice, Kerry. You take care of yourself, brother. Hope to talk to you soon.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.